Hi, everybody. Welcome in. Thanks for joining us today. We're going to cover inventory reconciliation and Deltek Costpoint strategies for accuracy and efficiency. So this is going to be a comprehensive guide to streamlining your inventory reconciliation processes. Obviously, we're Kinetic Consulting, and so we're excited to have you with us here today. Before we get started, a little housekeeping. So a little bit about Kinetic. So we were established in 2002 by former Deltek consultants, and we bring over 2 decades of experience to the Costpoint consulting realm, dating all the way back to System 1. Not to age ourselves too much here. We offer unparalleled Costpoint implementation design services, whether it's brand new implementation, Costpoint upgrade, re-implementation, add-on module, or ongoing support or training. We've got all your needs covered. So why choose us? We're a dynamic consulting firm equipped with a diverse background and knowledge base that effectively bridges the gap between users and technology solutions like Deltek Costpoint. So a few additional housekeeping items. This session will be recorded and will be made available on demand. All attendees will receive a copy of today's slide deck, and the chat function is disabled, but the Q&A is open and available. So any questions you have, go ahead and drop them in the chat, or in the Q&A feature, sorry. And if we have some time permitting, we will go ahead and take a few live. If not, we will follow up with everybody offline. So our speakers today, we've got Debbie White. She's one of our partners here at Kinetic and the lead on our manufacturing and materials team. We've got Chad Bishop. He is our director of product development. He was going to be showing us some awesome Costpoint business intelligence reports he's created for inventory reconciliation. And then I am Colin Quinn. I'll be your host today. I'm also one of the principal consultants on the materials and manufacturing team alongside Debbie. So today's agenda, we're going to go through understanding the reconciliation process, the challenges, the best practices, and the solutions to help you overcome your reconciliation challenges. And with that, I'll throw it over to Deb to kick this thing off.
Hi, everybody. First thing we're going to start with is what is the inventory reconciliation? And typically what we're doing is we're comparing the subledger for raw materials, finished goods, and our manufacturing cost reports back to the general ledger. This is typically done when you have asset inventory. So we're kind of going to be concentrating on when we have common stock or we have fixed price projects where we're holding the cost on the balance sheet. So we're going to start today with raw materials. Normally each of these buckets, it's easier to reconcile them if we do them independently. And first, we're just going to go through some best practices. So one, we need to make sure that on the last day of the month, close of business, that we're running our stock status report for raw materials. Just a tip, if we use this during doing job management to automatically kick off at night at the end of the last day of the month, you can always ensure that you have your reports that you need to do your reconciliations. Secondly, before we start reconciling, we want to make sure we've posted all of our journals. So we need to make sure we've posted our inventory journal, and especially for raw materials, our voucher distribution to post our PO vouchers. Third, we need to compute commitments for anything that has been received, accepted, and maybe vouchered but not posted for the period we're trying to close. And we need to create our purchase order accrual and post that to the general ledger. That way, everything that's on the stock status report should be in the general ledger at that time. And kind of the next best practice is use a standard template for this. You don't want to recreate this every month. We want to use a standard template. And upon request, we can provide a sample one for you if you'd like to use that going forward. Now, the next area we're going to look at is now that we are starting our reconciliation, we're comparing our general ledger to our project ledger, and they don't match. So the first thing we want to look at, you should only have to look at one time, is make sure that when we started Costpoint out, we started on good footing. Are our beginning balances in sync? So is what we had for the beginning balance for our inventory, does that equal what's on the general ledger? And that's just general rule of thumb. When you first go live, make sure that when you print out a stock status report, that is what you're seeing on your general ledger. Secondly, purchase order accruals. The purchase order accruals are only as good as your purchase order commitment report. So one thing that we want to try to do is make sure that our PO commitments are accurate and up to date. And so when we print them out at the end of the month for those received, accepted, and not posted items, we know we're getting a good accrual number posting back to the general ledger for those items. Another area we have issues are going to be with some of the purchase order issues. Sometimes we forget to add a part number or an inventory abbreviation, but we actually buy something to our raw material project account and org. Unfortunately, without a part number or inventory abbreviation, the stock status never receives those items. So that will always cause an out of balance type situation. What we want to be able to do is, again, review those purchase orders and make sure we don't have any reclasses or any costing or miscellaneous receipts we need to make to your purchase order or for your purchase order into inventory. The next challenge we have is sometimes we will enter an adjustment where the charge project account and org is the same as the inventory project account and org. This is great. Stock will be adjusted, but the general ledger does not get hit with this transaction. Now, there are times when it's necessary to do this, but you need to make sure, one, if you're doing transactions like this, you document in the notes of the transaction as to why it was done so we can eliminate it as a reconciling item. The next big challenge we have with raw materials is sometimes we get a little adjusting journal entry happy. And we make adjusting journal entries to the general ledger. Well, these entries will never affect our stock. So we want to make sure that if we are making an adjusting journal entry, we need to document why, and we need to make sure that stock is not affected by this journal entry. And there are times when you need to do this. I mean, there's definitely times, but again, just got to be careful with it. The next challenge we have is average costing issues. And these kind of arise because at the time you purchase and you receive the item into your system, upon receipt, it looks back at the purchase order price or cost, and that is the cost it writes to the inventory transaction table. If for whatever reason, when we go to put in our PO voucher, the cost is higher or lower than we originally negotiated on our purchase order, well, this can cause an out of balance situation because, again, stock's going to go in at the purchase price because that's what it knows when the receipt is made. The general ledger will get updated at the cost we do on the general ledger. So we might have to take a look at these sometimes. Another issue that we could have with average costing is a unit of measure conversion problem. We want to make sure that we have our parts set up as accurately as we can with a stocking and ordering unit of measure and a conversion factor if we need to. Again, we normally can't catch everything, but it's just something that you need to watch out for. The last one is related to a particular transaction called issues to purchase orders. So sometimes if we issue raw materials out to a purchase order to buy a finished item, or not a finished item, but buying a raw material that a vendor is going to be doing for you. So for example, you buy all the components to build a board, you ship those components out to your supplier, they put the board together. On the purchase order, we're bringing that board back into raw materials, and we've issued the parts to the purchase order for that. The problem is once you issue the parts, they no longer show on your stock status report. Now, this will eventually true itself up when you receive the finished board back in because it will come in with the purchase order price plus the cost of all those parts. But in the meantime, if we do an issue to a purchase order, we do want to look to make sure that we've accounted for all those purchase orders that have not been received and we need to add the value of those issues back as a reconciling item to our stock status report. Now, we've talked about these challenges. The next piece is we're going to talk about what tools can we use to identify these things. So the first tool, again, either using Cognos or SQL, best to leverage Costpoint Business Intelligence if we can. But we want to look at purchase orders to, one, identify any purchases that were made without parts or inventory abbreves to your raw material project account and org. The other thing we can do with this purchase order report is we can identify also anything for looking at the purchase order line where the purchase order price or cost differs from the amount posted to the general ledger. And this report can help highlight those things. So again, some information from the purchase orders can help us identify those issues. Secondly, inventory transaction report. So we can identify on the inventory transaction tables whether we have any transactions that were both hit the from and to account being the same project account and org, thus resulting in no GL activity. Another thing we could identify is any miscellaneous receipts. Again, a miscellaneous receipt is a one-sided entry. That one-sided entry normally is for a petty cash reimbursement, or for example, if you forget an inventory abbrev on a purchase order and you want to bring the part in. But there are times where you need to have the general ledger updated for that transaction. So you want to look at those to make sure that the general ledger was accurately accounted for when making those transactions. Now I'm going to turn it over to Colin, and he's going to talk about finished goods and our reconciliation process there.
All right, so finished goods best practices. So some of these are going to kind of overlap with raw materials, but they have different impacts for finished goods. So first things first, we need to print our stock status reports. So why does this matter, right? This report is your snapshot of your inventory health. It's going to show your quantities on hand, the value of those items, and their location. It's critical for reconciling to the general ledger and for planning purposes. Like all things in life, printing these reports, timing is key, right? So always print the report before and after any major transactions such as month-end close, physical inventory, or large transfers to make sure we're capturing those changes. These reports will also serve as documentation for auditors and internal reviews, and they will help validate what's in the system matches what's actually on hand. So next, we've got post-all journals. And while this sounds easy, we need to make sure we ensure all inventory-related journals are posted before we close out the period. Unposted journals can cause mismatches between the subledger and general ledger, and it's especially important if you're purchasing finished goods to post AP, compute your commitments, and post PO accruals to ensure all costs are captured in the correct period. Which leads us to our next point, which is computing your commitments and creating the PO accruals. So what this actually does is this updates the system with the commitments required to create the PO accrual, which is essential for accurate financial and project reporting purposes. So when's the best time to run this? So run this process before month-end close in the current period and after any major procurement and receiving activity to ensure all commitments are up to date. So why is it important? PO accruals ensure that finished goods received but not yet invoiced are properly reflected in our financials. So this aligns expenses with the correct period. So if buying to finished goods, remember this step is critical since finished goods purchases are loaded costs. Missing accruals can distort the inventory valuations. And last but not least, as Debbie mentioned earlier, we have those standard templates, right? So incorporate these as part of your monthly close and reconciliation process to ensure consistency. Again, both these templates are available upon request, so shoot us a quick email. We'll make sure you get it. And with that, I think we're going to move on, Deb, to finished goods challenges. Okay, so the challenges in finished goods, we have our kind of four-leaf clover here. We're going to start in the upper left with beginning balance. So just like raw materials, ensure you always start in sync. If the beginning balance doesn't match the prior period's ending balance, it creates a ripple effect throughout the entire reconciliation process. So best practice here is to establish a formal reconciliation process at period close to ensure the subledger and general ledger are aligned before even moving forward. Next, in the bottom left, we have cost skewing. Okay, so when you purchase to finished goods, all costs roll into the material bucket. Unlike manufacturing, where costs are distributed across material, labor, outside processing, and overhead. So this practice can actually skew our average cost because finished goods come in at a loaded cost, unlike raw materials, which typically come in with just the material only costs. And while this isn't truly a reconciling item, it does directly cause reconciling issues as it can distort our cost reporting and inventory valuations. So best practice and key takeaway here is buy parts to raw materials, not finished goods. This will ensure proper cost allocation and avoid skewing the inventory valuation. Next, in the upper right, we've got transaction issues. So when inventory transactions have the same project account and org for both the from and to, they can increase or decrease inventory without making any GL impact. So this makes reconciliation a bit tricky. Another thing you have to keep an eye out for with transactions are backdated transactions or late transactions and issues that can distort the beginning balance, making it even harder to reconcile. The next element kind of touches on cost skewing and transaction issues, but that's going to be our manufacturing order partial reliefs. So improper valuation of partial reliefs, so if we relieve them at an improper cost in the manufacturing orders can distort the average cost of our finished goods, leading to cost variances. The same applies also if we over relieve our manufacturing orders. Another thing to be aware with transaction issues is kind of how Costpoint and system behavior awareness, right? So understand how Costpoint handles inventory transactions, such as movements and postings, is key to identify and resolving the issues within your system. So if you're unfamiliar with those, reach out to your consultants like us. We'll show you how they work and how they flow through the system, so that way you know how to reconcile and where to look for first. All right, and last but not least, we have adjusting journal entries. They happen, and it's perfectly okay, right? But it's critical to document the reasons why they happened. This ensures transparency throughout the system. Another thing, journal entries should not be used to mask reoccurring issues. If you're making the same adjustment every month, it's time to investigate that underlying reason further, right? There's no need to do the same thing over and over and over again. That's the definition of insanity, right? So our best practice here is use journal entries as a last resort, prioritize fixing the source of the discrepancy in the subledger or at the transaction level, and document the reasons why the journal entry occurred. And last but not least, we have our finished goods reconciliation tools. So again, that's going to be Cognos and SQL, and we can leverage Costpoint Business Intelligence. And the first one we have on here is our purchase order reports, right? So the purpose of those is to identify the common purchase order reconciliation issues. So look for purchases that lack those part numbers or inventory abbreviations. These are often miscoded and can bypass the inventory tracking process. Also compare the amount received versus the amount posted to catch any discrepancies there. A best practice here is use this to validate that all purchase order receipts are properly coded and costed before we close out the period. Next, we have our inventory transaction reports. So these can be used to identify problematic or non-impactful inventory movements, right? So those transactions where the project account and org is the same on both sides of the transaction, it will not hit the GL and will cause variances. So be very wary of that. And last but not least, we have our general ledger reports. So we're going to use these to identify the manual adjustments and journal activity in the system. So use the general ledger post summary and detail reports to find journal entries that impact your finished goods accounts. So confirm that all those journals are posted and properly documented, and you'll be good to go. And some final finished goods words of wisdom on what you should expect in your finished goods account. A typical finished goods account should have a beginning balance that's in sync. We should have our manufacturing order reliefs that are valued properly. And you should have those key manufacturing inventory transactions such as issues, receipts, and adjustments. If any of these are missing or out of balance, that's your cue to dig deeper using the tools we've outlined here. And with that, I'm going to throw it over to Debbie to continue with work in process.
So now again, we're going to talk about work in process. Work in process is a little bit different beast than raw materials and finished goods. When we look at work in process, we're looking at a series of account numbers that are held on the balance sheet. We've got our WIP material accounts, and there's going to be two types of those. You're going to have raw material issues, which may get burdened with more material overhead burdening, depending on your cost pool structure. You also have subassembly issues out of finished goods. that have already been burdened and actually hit a different bucket as we go through that. The next one, WIP labor. These are all of the timesheet charges that were hit to a timesheet line type of M and directly charged to the manufacturing order. Our third bucket is outside processing or subcontractor costs. And the term subcontractor is a little misleading there, but it's actually additional steps that you basically ask vendors to do for you in helping with the manufacturing process. So this could be, for example, you don't have a machine shop, you need to have somebody machine a part for you, and you're going to provide them with the raw material. Another example could be that you build a board and you need it to have clear chromate done to it. That's a process that you don't internally do, so you send it out for that routing step. And another process could be you're providing the chips and raw materials to build a board, and you're having somebody else stuff that board for you. So there's a variety of different reasons of why you would have an outside processing step in manufacturing. The Those are primarily our direct costs. Then we go into our overhead costs or burden costs. And this could be an overhead pool, it could be a fringe pool, it could be a material handling pool. And it's based on a basis of either your material costs or your labor costs. This pool is actually using a target rate throughout the month because we don't know what our actual rates are till the end of the month. And it values the indirect costs in the manufacturing order and for that finished part when you move it. The last transaction we're going to see is the movement out of WIP to finished goods. So we have a finished item. We're going to take it out of the work order and it's now going to be available to be issued to a customer or back to another work order. Just some tips before we start the WIP process here. Um, you want to reconcile by project. So if you have multiple common inventories across different warehouses, do each one independently by project. You also want to reconcile each account individually because each type of direct charge can have different challenges associated with it. Third, the indirect costs. Make sure that your overhead allocation account is an asset account. This is set up in the cost pool when you're actually putting in the basis of the accounts and the orgs. You're going to ask for an allocation account. This is the account that will be used to pull the indirect expenses off of the income statement and reclass them back to balance sheet accounts or assets. And the last one is the overhead and burden. Remember, it's going to value at target rates. At the end of the month, it wants to recalculate and true up to your actual rates. And we're going to talk about that a little bit more. So work in process best practices, again, very similar to the raw material and to the um, uh, finished goods best practices. First one, your MO cost report. Now, the MO cost report's tricky because everything in inventory is very fluid and manufacturing is fluid. It doesn't care about accounting month-end periods. Because of this, we want to make sure that we do print out our MO cost report for open and, or I'm sorry, released and in-shop orders for all your open balances, and then for your closed and closed or completed MOs for all your closed MO balances on the last day of the month. Again, the tip for this is job management. We're going to set up these variety of parameters and will automatically run for you. The next item we're going to have, again, posting all your journals. This one, we've added an additional journal. You want to make sure that labor distribution is posted through whatever you can as of that period. If your payroll period is different than your month end, you may have to accrue some of these labor charges on the general ledger. And again, a standard template with a standard process is ideal for reconciling your work in process. Now we're going to get into the work in process challenges. And for each direct cost, there's a separate set of challenges. First, beginning balance. Always make sure your beginning balances are in sync. Second, you have to look for any transactions that may have been entered late. So with raw materials or subassembly issues, if they're entered after the MO is closed, Costpoint's going to want to write that off as variance. So just something to keep in mind. Any late transactions are going to hit your variance account. Last we kind of have here is adjusting journal entries. Again, anytime you make an adjusting journal entry, the inventory and manufacturing systems do not know about that journal entry. So you want to make sure, again, it's documented if you have to do it. And again, you do it as less frequently as you have to. And again, we'll talk about timing and of that a little bit later on here. The other thing that is just a little note is when you look at the MO cost report, it does not break subassembly issues. So anything issued from finished goods that's already been burdened back into a new work order, it does not break those out on that report separately. And that does cause a little bit of confusion. The costs are there, but they may either be affecting a different account that doesn't show on that report, or they're included as a debit to the relief costs. So that's another piece that we have to kind of watch out for a little bit. Labor challenges, again, we probably will have to accrue labor in if our payroll periods don't end on the month to be able to post that time in. Another labor challenge, and I'm going to talk about it kind of in two prongs here, late labor. So again, if you close the MO and the labor's late, then that means any fringes associated with that labor are also going to be late to the MO, and it's going to show up on your variance report. One of the ways that you can try to alleviate this as much as possible, that if you're a Deltek time user, you're going to schedule and use what's called an in-process timesheet. With an in-process timesheet, cost point can flow on a date, or labor can flow to cost point on a daily basis from time and expense as an unapproved timesheet line. Once it's in the timesheet table, it will show up on your MO cost report and on your MO inquiry screens when you're looking at that cost. It cannot be posted to the general ledger though until the timesheet has been approved. So we do have some timing issues with labor. If you're a shop floor time user, it's a little more of an automated process, but it can send, if you wanted to send time every 10 seconds, you can send time every 10 seconds. Again, it uses an in-process timesheet approach. It's not approved labor yet. It will not post to the general ledger, but it will show in your MO. Correcting timesheets is a whole different problem. At the time you realize you may need a correcting timesheet, there's a good chance your MO may have already been closed. If it's already closed, if this is not a material amount, your best bet's probably to let it to roll through as a WIP variance for a late timesheet charge. If the item is still in inventory and it's a materials amount, you may want to reverse the relief, put the time in, and then close the MO again. Again, it's all a timing. Where is that part? Do I still have it, or has it already been issued somewhere else or delivered to a customer? And again, kind of a strong suggestion here is you do try to post your time in daily, even though it's not posted to the general ledger. But that way you can kind of ensure that when you're looking at your manufacturing order costs, that item is going to finished goods with the best cost it knows. The next set we're going to talk about is those outside processing. Again, the chromate, them machining a part for you, painting a part, whatever you may be having somebody on the outside do that's part of the routing of that manufacturing order. With an outside process, again, because manufacturing is fluid, it doesn't care about accounting periods. Just as soon as you create that PO, the cost is going to hit the manufacturing order. Okay? It is not going to hit the general ledger until you receive and you post voucher distribution to pay for that item. So one of the things that we need to do on a monthly basis is find out how much of the subcontractor costs on your open MOs has not hit the general ledger yet. That's going to be a reconciling item. It's going to be on your MO cost reports. It's not going to be in the general ledger. So that's one issue we have here. Another issue is I put it on here, but I think it's potentially a issue with cost point and may even be classified as a defect in cost point. If you void a PO line, it takes the cost out of the MO. If you close the PO line short, the costs stay in the manufacturing order. So it's just something to watch for, that anytime we close a line tied to a manufacturing order and routing step, we need to make sure that we reduce the costs so that the MO is correctly reflected with costs. And then the last one here is just your purchase order accuracy. If we end up paying a different price than we put on the purchase order, the manufacturing order cost may be over or understated. So again, just something else we have to take into consideration. WIP indirect cost challenges. These really aren't cost challenges necessarily from a reconciliation perspective, but these are more challenges when you're kind of looking at things. Again, if direct costs are late, indirect costs are going to be late. So if we issue items in, we do a correcting timesheet, anything like that is directly going to affect these indirect costs. So the one thing, again, you just want to make sure that you're running your WIP reconciliation report at the end of the month, and you're looking at this. What CostPoint wants you to do is run the report. It's going to give you the detail of whether the variances are coming from direct costs, labor, material, or outside processing, or they're coming from your indirects. You have a difference between your actual and your target rate. It's going to want to book an entry each month. Typically, that entry is booked to the income statement under cost of goods sold, because at some point, these costs would be either finished goods is understated or cost of goods sold is understated or overstated. Okay, so you do want to look at these. And again, overhead is calculated on a year-to-date basis. So when I get to March, it's going to go back and it's going to compute the rates for the year, looking at January, February, and March. Any manufacturing orders closed in January, February, or March, the variance will change. So it's just something that you have to kind of look at when we're talking about the indirect costs. Another item to mention here is going to be your manufacturing order reliefs. And again, late costs are going to cause lower values hitting finished goods and higher values left over in closed MOs. Cost Point's always going to want a closed MO to have a zero value when it's completed. So it's going to force that zero value with the variance. The other thing that you have to particularly be careful with is if you're doing a partial relief, you need to make sure that you have set up a specific procedure with how you determine what the amount is you're going to be relieving. Too often we have seen folks who do partial reliefs where they relieve more costs than were ever in the MO, or they leave costs behind in the MO, and then you have these pretty significant variances getting posted. So either way, you do want to make sure, because I know a lot of people have to do partial reliefs. It's just part of how we do business. But you do want to make sure that when you do a partial relief, that you are confident that the costs you're relieving for that partial are accurate. Again, WIP variance. always look at this at the end of the month. Some people don't book the variance at the end of the month. Even if you don't book and you wait till the end of the year, keep track of what it is. You don't want to be surprised with a huge hit to cost of goods sold at the end of the year because we left dollars behind on the balance sheet that had no quantities or parts associated with them. So again, any balance in a closed MO that was closed during that year will be written off to the variance. If you have an MO that spans multiple years, those costs will be captured and trued up at the end of each year with the actual rates. And so any variance in those open MOs would be related to current year costs, unless you do a negative issue for a transaction that you did last year, something like that. But again, there's a really nice report. It's going to give you all the work orders and it's going to tell you what your overhead variances are or your WIP variances are based on labor, material, OSP, miscellaneous one, miscellaneous two, and your indirects. So you want to look at that report and keep an eye on what's going on with that. Okay, now we're going to talk about how we find all of these problems. So first, we're going to look at the inventory transaction report. The inventory transaction report should show us any issues from raw materials into WIP. It should show us any issues from sub-assemblies or finished goods into WIP. And it's going to show you all your MO reliefs. So just if you're verifying balances, it's a really good way to see what those are. You filter out those transaction types and you look at that inventory transaction report. Purchase order report, we want to look for anything bought to any of the WIP accounts because anything bought on a purchase order to a WIP account will not flow through to the manufacturing order unless it's an outside processing and it's referencing that MO. Okay, so one, just a good double check. We didn't buy anything for WIP that we accidentally did. We want to look at that. The second thing from the purchase order report is we want to identify any subcontract lines, again, where the items have not been posted to the general ledger. That's a reconciling item. They're included in the MO cost report, but they're not included in the general ledger yet. From a labor reporting, we're actually going to want to look to see, did we charge any timesheets to the WIP project account and org, but without an MO number? You know, somebody, they can't find the MO, they don't remember it, they just hit the project account and org. Well, the general ledger will be increased, but the MO is never going to know about those hours. So that's right off the bat kind of an outstanding issue. Other than that, labor reporting is pretty smooth, but I do see that a lot of times where we will have some error in timesheets hitting the project account and org, but not the manufacturing order. Now, the next three reports we're going to talk about, or data dumps, or however we want to call these things, or pool this data, inventory burden or overhead. So, as part of your month end close, you compute your actual rates. You basically build your rate application table. And one of the things as part of your month end close is you update the inventory bird sum table. So the inventory bird sum table and inventory bird sum detail table are kind of hidden tables. You cannot see them from the front end of Costpoint. You have to either look at the table with Cognos or look at it with SQL. But it has your cumulative target and actual year-to-date rates as of the last time you did your month end close. Your manufacturing orders grab the rates from that table, and that's why when you open the MO screen and you go to the cost, you automatically see the rates there. It's a real-time calculation. I charge this much labor. I need to apply this fringe rate at this target rate. When we're comparing targets and actuals, We'll run reports at a target rate, we'll run at an actual rate, and you'll see what the differences are between the two. But again, Costpoint always wants to true to actual. Okay. The next set of reports, again, are your GL reports, and this is basically your GL post sum and your GL detail. Did we make any adjusting journal entries to any of the WIP accounts? And if we did, why? So we can use those data points to determine that information. And the last but not least, and this is one that always causes us a little bit of a problem. So remember before when I said from a timing perspective and best practice, you run your MO cost report on at close of business the last day of the period. Well, when you run that, you know what your year-to-date target rates are, but you don't have your actual rates for that period yet. You're not going to have those until probably a week and a half later as accounting runs through the close process and gets everything in there. Because of that, it's a little bit difficult with the MO cost report because again, it's fluid. It's based on what are my MO costs at the time I run the report. There's no way to back into a prior period. So a really good option that we have is leveraging Costpoint Business Intelligence to allow you to recreate the MO cost reports in Cognos. And by doing this, you'll be able to see information either at a target or actual rate, and you'll be able to run them as of a period of time. Now, with that point, I'm going to go ahead and turn this over to Chad. And Chad's going to talk a little bit about Costpoint Business Intelligence and this particular report.
Thanks, Debbie. So as Colin and Debbie mentioned several times, I think as they were going through the presentation, you have several tools at your disposal to help you with, trying to help with reconciliation. They've mentioned obviously SQL, and then there's other query tools. The query tool that we're going to be talking about a little bit is Cognos at this stage. Cognos is a great tool to use if you have questions about your data and you need to kind of delve in further to try to figure out what's going on. It's really good tool when it comes to the Costpoint Cloud customers, as that it's packaged with the cloud. It's already out there for you. And if you don't have a way, and a lot of cloud customers don't, to get at their data, through some backend tables or backend processes like SQL or other query tools, you can do a lot of that kind of delving into data or data mining with the Cognos tool. So with that, I'm going to go ahead and jump into the MO cost report that we had created as a sample for this. We thought it would be a good idea during this presentation to kind of show you an example of one of those reconciliation reports that we created. So this is a sample of an MO cost reconciliation report that we created for this demo. It has several prompts on it. As you can see, the prompts across the top, those are the required prompts. Again, company fairly simple required prompt. As Debbie had mentioned, trying to figure out, one of the issues potentially in reconciliation is figuring out the differences between target and actual, and if there's a discrepancy there. So you can run this either at target or at actual rates. For any prior years that you might be running this report, it will be run at actual rates, and that's what it's going to be used at. So if I run for an MO that's crossing multiple years, say, it'll give me the target rate for this year, but then actual rates for prior years if I run it at target. And then an as of date. Again, another thing that Debbie mentioned that is a difficulty with the report that Deltek provides is that with this report, I can go ahead and go back dates. So if I want to go ahead and look at some date prior than today, I have that ability. And that's what that as of date there is. So those are the required prompts on the report. You can see that I have 6 other prompts on this report as well. The ones that are most often going to be used across those would be the project, the status, the MO type, and the build to inventory abbreviation. Again, they're all optional. You can choose to use those or not. I would say one of the best practices is probably using the project prompt. It's just a lot of data, so it's easier to reconcile project by project. So that is, an important one to probably use as you go forward. And in our little sample, I have filtered for a single project when we're looking at our MO cost. I'm going to show you that in a minute. I've also filtered for open MOs in this report that I'm going to show you. So here is the status. It is in shop and released. If you wanted to see closed MOs, you could also run this report to show you that. And again, I could uncheck the in shop and release and check the closed and completed, and I would see a closed MO report in that regards if I'm looking for that. And then again, like I said, you had the additional prompts if you want to go ahead and further constrict your data. So without further ado, let's flip up the report now. So you can see this is a stacked view of that report, the MO cost report. I did it in a stacked view so that you could see all 46 columns. And yes, there are 46 columns in this report. Again, the idea behind that is to try to give you as much information to help with that reconciliation process as possible. So on the left side, you're going to see some more descriptive columns. So if you look at that kind of top left snapshot there, you'll see things like, the MO status and the order date and the part description. Just more descriptive columns to start out to kind of tell you exactly where, which the MO you're looking at and some information behind it, whether it's, in shop or released, or if it's, the MO type. Once I get further into that report, you're going to start seeing numbers, and I would call that the meat of the report, really. This is where you're going to have, the area that you're going to see all those reconciliating items, right? So you'll see your quantities, your ordered and your completed quantities. You're going to start seeing this level buckets. So your material overhead, labor overhead. In addition to that, we also are putting on this report the lower level or sub-assembly information, right? And then in addition to both of those, we also have the relieved information. So as again, Debbie pointed out, making sure that you're aware of what you've relieved and how you've done that. We've added that to this report as well. So trying to give you that full picture to what is going on an MO is really the gist of what we're trying to do here. You'll see that we have also listed each individual MO by fiscal year. So if you can kind of see that in the top, there's an MO on this report that has crossed multiple fiscal years, 2023, 2024, and 2025. We're broken those out. Again, the reason we're breaking those out is because there is different overhead that we need to apply to those different years. So we can't kind of push them all together here in this report. If you really want to try to get a true picture of what's going on, we've broken them out by fiscal year. And then we've totaled all that across to the very end. That's that far right column, which is the total amount, the total MO remaining amount there on the far right side. And finally, within this report, we're also putting in subtotals, and that is, again, to allow those MOs that might be crossing multiple fiscal years, right? You may want to know what that total amount is for that MO, right? So we have subtotals that are put into this report as well to help you kind of reconcile all the way across. And that's all I have. Back to you, Debbie.
Thank you, Chad. I'm really excited about this report. All right, so to kind of sum up our presentation here today, we're going to talk about best practices. And again, some of these things might be a little redundant, but one, standardize your process. Make sure that you have a consistent, repeatable process that you can do every month for reconciliation. It's hard enough, but with trying to invent the same wheel every month, it just makes it impossible to do. System knowledge. Make sure that you have a good understanding of how Costpoint handles each inventory transaction. Of there's a lot of challenges we went through in the presentation. If you don't understand something, please reach out. Happy to answer your question about how something would work or something like that if you don't know. Ensure real-time accuracy, again, with job management, if we can utilize that. Make sure we get our reports printed at the end of the month because, again, they could be recreated. And again, the MO cost report, we just saw you the recreation of that, but it's always a good habit. Your auditors are going to want to see consistency here. Set up batch manager, run it the last day of the month, maybe at midnight or something like that after everybody's gone home for the day and the transactions have been added. Kind of another thing with that is don't let your users backdate transactions. you can see, because you can see when they entered them and when they backdated them, because that will cause you problems with reconciliation. And I believe Colin had mentioned that a little bit earlier. Next, utilize your tools. Again, it's really vital that you understand what Cognos can offer, or even just the SQL data can offer, and understanding your tables to be able to reconcile this. It's going to make your life so much easier. And there's just a couple more. If you see a issue that keeps coming up, don't just reconcile it every month and keep going. Find out why the issue is happening. Go back, and if we have to, we may have to update desktop procedures. We may have to do some training with the actual users who are creating the problem to try to fix that problem. You don't want to just be adjustment journal entries every month to try to fix this. If we keep seeing something that is an issue, let's try to understand it, go back and see if we can fix it. And the next one is really my preference. I like, if we're going to adjust inventory, so some clients like to have their inventory when they reconcile it, they like to do journal entries to adjust the inventory. I'm going to make a suggestion here that we do these journal entries as reversing journal entries, because again, because materials and manufacturing are so fluid, there's a good chance that we miss something in June that will fix itself in July. If we hard book a lot of entries throughout the year, then you kind of have to go back and relook at that stuff again. So again, it's a suggestion, but it just I think gives you a little more options with reconciliation. Now with that, I'm going to go ahead and turn it over to Colin for some closing statements and then some questions.
All right, so I'll take us home here. So the ways Kinetic can help us out, right? So we can do process assessments, and that's more of a health check of your overall system. We can do it for your current reconciliation processes, but we can also do it from a holistic approach, right? We can take a look at all your settings screens and Costpoint, talk to your end users, and figure out ways to help you optimize your software investment. With that, we also offer our custom solutions like Chad demoed here. We have the ability to help you kind of create and design those custom reports that are going to help your team better reconcile your inventory, right? So we've got the expertise and knowledge to help you get this information you need out of your system to help you report on and make your life easier. And again, we offer full implementation support, whether it's a brand new implementation, a re-implementation. We're there as a trusted advisor to help you implement the best practices and train your team so you are efficient in the system. We don't just turn it on and walk away. We make sure you learn and grow with your system. And that brings us to ongoing optimization. So again, we're available for support POs, for regular check-ins to ensure your processes remain efficient as you grow and hopefully merge or mergers and acquisitions as well, whatever it may be. We're here and available to help out. And with that, I'm going to open this up to Q&A. So I'm going to pull up the first question we got. We got a couple questions here. So Ahmet asked, is there a slide deck available for this? Yes. Everyone who attended today, you're going to get a PDF version of the slides we presented here. Next question we have, this is from Steve. So we vouchered and posted a PO without realizing, and we forgot an inventory variation. How do we fix this? I'll throw that over to you, Deb.
Okay, so if we forget an inventory abbreviation, naturally the part is not going to go into stock, but it is going to hit the general ledger. If we identify this and we have the part, we know where it is, the easiest thing to do would be to do a miscellaneous receipt referencing the original purchase order and putting a little note that it was missing an inventory abbrev, and add the part to stock at the value on the purchase order. That will bring inventory into sync with the general ledger. Again, the miscellaneous receipt does not post an entry. Now, to complicate that a little bit, if the part has already been issued, it's in another manufacturing order, or it may have been delivered to the customer when you realize this. That makes it a little bit harder, because at that point, then something like raw materials would be overstated on the general ledger, and cost of goods sold understated if it's been delivered to the customer. So at that point, that is an instance where we might want to do a journal entry to move those costs over to cost of goods sold for that item. Ideally, we find it when the item comes in that there's nowhere to stock it. But in case we miss it, we may have to do some research and again, dig back and find out where that item is. Another option may be to reverse a transaction, get the item in, redo the transaction with the right cost, and then issue it out. So again, you gotta kind of take it case by case, but those are kind of three options that we might have.
All right, we got a couple minutes left, so I have one more question here. Chad, this is going to be for you and Debbie, so you might want to come off mute here. So the costed bombs in Costpoint appears to have missing costs associated with the raw materials. Is there a cost table in the back end that needs to be updated? Is there an indented bomb report available in Cognos? So that was from Jennifer.
So Chad, do you want me to take that?
Sure, I can answer really quickly. Yes, there is an indented bomb report that is a standard report within Cognos. It's under, I believe, the manufacturing folder. It is a standard, like I said, it's a standard Deltek report. Again, I don't know if that is going to answer your question or not, but yes, there is one that is delivered by Deltek with Cognos BI. It sits, I believe, in the manufacturing, and there may even be a shortcut in the materials folder as well. Go ahead, Debbie. I'll let you kind of.
So what you have to do to get that report is you actually, when you run your bill of materials report, you tell it to create a Cognos table. Now, this report doesn't have any costs in it though. So what we'd have to probably do is tweak that report to add the costs in so that you could get a costed bomb from that table. And I have had clients do that in the past. So if you'd like to reach out, I can give you some more details on that.
Awesome. All right, do we have time for one more? I think we can get one more in here, guys.
Sure.
All right, this is from Amit as well. So when reconciling raw materials where the system choice on the manufacturing side is apply burden upon moving to WIP, but raw materials in the base of the G&A pool, will there be reconciling issues? This is more of a pools question than it is kind of, I guess it's both.
So first of all, does the G&A pool, because there's a flag when you set up your cost pool that says it applies to inventory or not? So if that flag is checked or unchecked, it'll apply it to inventory. And normally, again, if you're applying the overheads on the issue, it would be included in the inventory bird sum tables and would be applied upon issue to that manufacturing order. And
Awesome.
again, if you've got other questions with that, please just reach out.
And again, if you guys need or want a copy of any of the templates we mentioned today, please shoot us an email or go through our contact page and request it. Right there is going to be the best way to get it, and I'll make sure that gets over to you guys. You will also receive, again, a PDF copy of today's slide deck, and this webinar recording will be available on demand, so you can check it out at any time, share it with your coworkers who also need reconciliation help, or just revisit it. So thanks for joining us today, and we hope you guys have an awesome rest of the day.
Thank
Thanks.
you.
Bye.